Hi friends, good week. How are you? How was your weekend? I hope everything is good and we are about to see another exciting week on the market. And I would like to start with my weekly review for the 21st of February 2011 week. Well, on the previous week, I've started with the US dollar index analyzing, and today I would like to continue on the same line. Why? Because the US dollar concentrates all the trading during the last weeks, and it will continue this way. And from my point of view, at least all the way to April, when Bernanke's helping program will come to its end. So what do we have on the weekly chart of the US index dollar? Let's see. First of all, this is the uptrend line, right? Everyone understands it, everyone knows it, everyone is waiting for it. So on the previous week, I've explained you about this situation, as you might remember, right? We had this engulfing, and I told you that despite the engulfing, we are still bearish for the US dollar, right? Why? Because of the MACD. After such patterns, usually the MACD should begin the slope up, but it never did, as you might remember the previous week. Instead of it, it continued down, right? And this week we saw, actually it happened only during Thursday and Friday, because the beginning of the week was very quiet, very unusual, but the end was very volatile, and we saw the euro flying up, we saw the British pound flying up, Australian, New Zealandian, everyone. So actually this is the continue, but here is something to remember. The divergence is still here. Only now we saw the MACD cross the zero line down, right? Only now we can see the zero line cross down. Only now we can see the moving average here. The divergence is still here, so we still cannot actually erase the US dollar as long as this uptrend line holds itself. Okay, it's a critical dynamical support. I I can see actually this dollar index going down all the way here. Let me. Oh, what did I do here? Just a second. Let's delete it. We don't need this line here. Okay. Actually, I can see it going to this support and complete the double bottom here. Actually, it would be even on the line if we draw it from between the lows, right? Here and here, right? It would happen on the same line. So it's still logical that we will see a double bottom here, but it will take some while more. It will take few weeks more. And as long as we're getting closer and closer and closer to the end of the helping program from Bernanke, right? The divergence is getting critical more and more and more and more. Once we will have a close below this uptrend line and below this support line, it will definitely push the US dollar for long run, long time weakness. But as long as it doesn't happen, the US dollar still has its divergence and still could getting stronger every single week. So with this, let's go to the charts and see what is happening on the majors and on the indices and the commodities. Let's begin with the US dollar Canadian, a pair that I usually don't begin with. We can see the bullish pressure of the MACD here, right? If we zoom out, we can see it actually happening long time now. Can you see it? Long time, right? You see it. Even the RSI is pushing up of all the lows. What does it mean? Will it hold? Will it happen? Well, we have a critical support here around 0.88. as you can see here, right? Once the weekly chart will close below, we will go all the way to 0.95 or maybe even 0.93 again. All right, and I remind you, this is still investors trade, right? They are aiming 0.95. I remind you. We are going now to the daily chart. What can we see on the daily chart? Another bullish pressure. So what does it all mean? Are we going to see up move? If you want to be conservative, then wait for the break of this uptrend line, downtrend line. Right? While once this uptrend line will be broken with the divergence, with the weekly and the daily divergence, then we will see an uptrend line. As long as it holds, you can try to trade between these lines. Alright? You can try to take this long. It probably will happen all the way back again to the 20 moving average of the Bollinger Bands and this downtrend line. Okay, but once it breaks this downtrend line with the divergence, it will be a bullish move. So this is about the US Canadian. What about the else of the pairs? Let's see the euro dollar, for example. The euro dollar is an interesting pair, and I will explain why. During Friday, I also wrote about it on my blog, on the daily blog. It broke during Friday this 4 hours flag, right? 4 hours flag. The RSI hold the 50 level and bam, up again. Once it broke this level, we entered a trade and we took actually this quick move. At the beginning was a little suspicious while once it hit this support line, this resistance line, sorry, right? This resistance line when it hit it, but then it broke it, and it looks like we are going to see it again on 137.40, right? If it breaks this level, it probably will continue all the way to the previous high, 138.50. So this is the expectations from the euro, actually. If we take a look on the weekly chart, we have our let me show you this. We have the our confirmations here, right? Because we had 3 dodges and a bullish candle. Does it guarantee a bullish move? No, it's not. No, it's not. As long as this resistance line still holds itself, as we can see here, right? As we can see here, this is the resistance line. Here it is. Right? It was a support, then it was, oh sorry, here, right? It was a resistance, it was a support before, it was a support a few times, right? Then here, and then it blocked here, resistance again. Okay, so as long as this support line, this resistance line around 140 holds, we can't actually guarantee a bullish move. We have also the 130 850 level, this one, okay, it's also a resistance, a critical resistance, and it still was not broken actually. So I am bullish for the euro, once it breaks the 138.50, it would be a signal that we are going to 140 at least. But from the second side, right, if it will not break the 138.50 here, this the resistance, right, and it will complete a bearish divergence here, it will be a signal, a great signal to sell, because it could take the euro all the way seriously down. So actually my expectation, as I say, that we are going up. 137.40 could stop it for a moment, but then it should actually reach 138.50 again and complete maybe the bearish divergence. If it will break this level, then we will probably continue to 140 or maybe even 142. Okay, so we will continue to follow it. What about the British pound? The same situation as the euro, right? We have this resistance which still was not broken, as you can see. 162.50, right? And as Murphy rules, it closed actually on the resistance. So what can we expect from here? The divergence could be completed any moment, right? And if it is completed, we could see beginning of a down move as we saw during the end of 2009. But once the weekly chart closes above this line, it will continue, the British pound will continue all the way to the previous resistance around 167 at least, maybe even higher. Right? If we go to the daily chart, we also could have a daily resistance, a daily bearish divergence being completed here. So if you follow this chart, friends, then you understand that what we saw on the US dollar index chart could actually happen on the majors chart. And if we take a look on the daily chart of US dollar index and not the weekly as we saw before, what can we see here? We can see that extra down move here could complete daily and weekly, both times, right? Daily and weekly bullish divergence. It's rare situation, very rare situation. And as we are getting closer and closer to the end of the helping program from Bernanke, this divergence is getting critical and critical more and more, right? Oh, about the next pairs, I will go quicker. Dollar franc, from my point of view, will continue to move on this sideways moves. From my point of view, this is how I see and dollar franc. So once it reaches this support line again, we should look for completing of the divergence and buy signals. US dollar yen, still bullish from my point of view, still bullish. Once, because it broke this triangle, I've explained it during the previous week. It broke this triangle, it should continue up. It could test it around this level, around the 20 moving average Bollinger, but it should continue up. And the weekly chart also confirms it. We can see the stochastic, we can see the RSI trying to reach the 50, trying to break it. So from my point of view, it will do it. Okay, so we have what to expect. And if we take a look, we can we will also see that the 200 moving average of the daily chart also provide us as some of a target. I still think the dollar yen should reach 84.50, maybe 85 at least. If we take a look on the Australian New Zealandian and the Australian dollar and the New Zealandian dollar, let's see what it means. Can you see the Australian dollar? It could complete a triple top here with a bearish divergence, as we can see. Also a combination from what we see on the US dollar index. Can you see it, friend? Of course you can. The New Zealandian dollar also, watch what it did. It made a move, right? And now it was blocked here on the resistance and on 20 moving average. It could be a triangle, it could be a flag pattern on the 4-hour chart. If it is a flag pattern, we will see a break probably and more down move. So let's see how it begins on the beginning of the week. Another pair to follow, Australian New Zealandian, could actually complete a bullish divergence, a bearish divergence here around the top, around the previous top, right? Something to follow. And now, let's go for the another pairs. So let's see. Let's see another. Now I want to show you the commodities, right? The gold and the silver, which reached the critical peaks. The gold should, as I told you, as long as it holds this uptrend line, I am bullish, and we continue the up move. It could complete a double or triple top here with a bearish divergence as well, but the big down move will begin only when this uptrend will be broken. About the silver, what else can I say? Look at it. Just unbelievable, right? It created a new high of 31 years. As long as the divergence is not completed, I am bullish. But I guess it will be completed soon. Now, interesting thing. A wheat created, as you can see, a bearish pressure. This is a wheat, a weekly chart of wheat. Can you see it? You can, right? It's a bearish divergence here. So actually, we could see at the beginning of down move. Now pay attention. The last candle was a 3 candle engulfing. It could correct itself, but then the wheat should continue down at least for the 20 moving average, but it could go even more and more. And this is the weekly chart. It was the weekly chart. Now it's a daily chart. A good confirmation to sell could be once the daily Bollinger Bands will be opened, such in this case, for example, they were opened, right? So it is a good one to follow. And now for the indices. Don't forget the S&P 500. I've been talking about it 3 weeks now. I'm following it, and I still guarantee that the down move is getting closer and closer. Do you remember this crab? Right? This bearish crab pattern. It's an harmonic pattern, right? We had this reversal target, actually. It was not stopped on the first one, around 1000, 1330 level. It could stop every moment, but from my point of view, it will go now for the next level and the next resistance of these zigzags, as you can see here, for the next zigzags, and the yellow line. Once it reaches it, it would complete the divergence also, and from this moment, I believe that the indices will go down for a serious correction, and maybe even a U-turn. So this is my expectation. All the rest of the indices should follow the S&P 500, of course. The Dow as well is going for the next resistance, as we can see. Right? Once it happened, it will be the beginning of the critical correction. The divergences are here. We remember it. The weekly, the daily, every time frame divergence is here, right? So it's a question of time when it happens, not a question of when, and it will happen, right? So as I said on the previous week, and this is the time to take risk. This is the time to take risks. We can lose 1 time, we can lose 2 times, we can lose 3 times on this divergence. But once it happens, it will cover all the losses and provide with much more. Because for those of you who follow me and know me for a long run, you must remember this the May of 2010, right? We must remember this down move. I also told you about this critical divergence, right? And look what happened. So we took a risk once here, one here, but finally it happened, and look what happened here. So follow the indices. The down move is about to begin. It could take 1, 2, 3, 4 weeks more, right? It could. It could continuing and create more and more critical divergence. But once it happened, it covered all the failures during the risk taking during this I call it false up move. It's not an up move we can enjoy, because the bearish divergence will win and will take all the way down. Friends, thank you very much for your time. I wish you a great week trading and a successful week. Thank you, and thank you for your time watching this video, of course. Goodbye. Vladimir.